Hi, folks. I trust all you are doing well. So, in previous lecture, we have started discussion about startup valuation. So, where we have taken the example of Comtech computer manufacturing company who manufacture computer, right? And they are planning to raise funds from the investors. And for this, they have to prepare the financial model so they can find out the valuation of business and they can raise the funds accordingly. So we have seen the assumption part. We have seen that what assumption company has made, and according to this assumption, we have to prepare of the financial model, right? So here we have done detailed discussion on sales and collection, and we have seen that how you can compute the value of sales. Also, we have discussed about the credit and cash sale component. Then we have done detailed discussion on debtor value, right? How you can find out the debtor value with the help of debtor days, and we have also discussed about the cash collected during the year. These all things we have covered in detail. And after that, we have done detailed discussion on operating cycle. So we have seen that how you can compute the operating cycle. Then we have discussed about the cost, that is cost of goods sold. How you can find out the value of cost of goods sold. These all things what we have done, we have discussed in detail. Then later on, what we have done discussion on inventory and purchase, right? So we understood how you can find out the value of inventory, right? We have done detailed discussion on creditor value, right? These all things we have discussed in detail. And today I will start with headcount overview. Now, what is the meaning of headcount overview? Here, with the help of headcount, we will be able to find out the amount of salary which is going to be paid to the employees, right? So here in assumption sheet, if you see, so specific information is given related to the headcount. Now, if you see here, they have given you the information related to number of employees, right? So in first year, company has hired 15 employees, right? Company has hired 15 employees. Then in next year, 15 employees were there. So this is the data related to headcount is given here. Then after that, you can see here, periodic based salary is given. That how much salary company pays to their employee. Now here, what I will do, I will bring these values here so we can find out the total salary which is going to be paid to the employees in coming years, right? So first, what we have to do, we have to bring the headcount numbers here. So nothing we will do, we will copy the data from assumption sheet. So you have here, what you have to do, first you have to select all the cells, right? First you have to select all the cells, then press equal to here, and then you can go to the assumption sheet, and then you have to select this particular value and then press Control Enter. So automatically you will find the headcount number here. And then what we can do, we can do the total here. So total is going to be 15, 22, 23, and etc. Right. Now here what we have to do, we have to calculate the salary here. So we know that how much salary company will pay to their employees. Right. So here we know the headcount number. So in assumption sheet, headcount salary is given, right? How much salary company will pay to the CEO, right? How much salary company will pay to the CFO. This all information is given here in this sheet. So what I will do, I will select CEO's headcount, right? So there is one CEO in the business, and I will multiply this with the salary which is going to be paid to the CEO, right? And here, what we have to do, we have to freeze the column, right? We have to freeze the column because here we do not want to change the column, right? We do not want to change the column. So what I will do here, I will freeze the column. So F44 is the cell number, and here I will freeze F, right? I will freeze because I want F column every time when I will apply the formula. So here I will press Control Enter, and here you can see I am able to find out the salary which is going to be paid to the employees, right? And here what I will do, I will do the total. So let's do the total here. And once you will do the total here, you will get that how much total salary will be paid to the employees. So I think you understood what I have done here right now, right? Simply, I have multiplied the headcount salary with the number of employees, right? So here, if you see, so number of CEOs which are appointed in the business is one, right? Here you can see the number of CEOs which is appointed in the business as one. So the salary of CEO is given in the assumption sheet is $200,000, right? Salary of CEO is given here $200,000. So company will pay $200,000 to the CEO of company, right? So what we have to do, we have to multiply 1 with 2 lakh. So we will get there 2 lakh. Here salary of CFO is 175,000 and one CEO is there. So I will multiply 1 with 175,000. If you see administrative assistant, right? So number of administrative assistant in a business are three, right? And the salary which is paid to the one administrative assistant is 35,000. So we will multiply 35,000 with three, and here we will be able to calculate the amount of salary which is going to be paid to the administrative assistant, right? So we have multiplied the headcount with their salary, and here we got the total salary which is going to be paid to the employees, right? Now here you can see this is the salary amount which is going to be paid to the employees. Now here if you see an assumption sheet, one information was given, right? One information was given that benefit which is going to be provided to the employee each year. Appraisal rate is given, right? Here you can see appraisal rate is given, that is 12%, right? Now here what company will do, company will give appraisal to their employees, right? Company will give appraisal that is going to be 12%. So here what we have done, we have taken normal rate, right? We have not provided the effect of appraisal while calculating the headcount cost, right? So now here what I have to do, I have to give the effect of appraisal, right? So how much appraisal company will give? Company will give appraisal that is 12% here, right? That is 12% here. So here, if I want to convert this into factor, so I will take 1 plus growth rate or 1 plus appraisal rate. So it will become 1.12. So here, what I will do, I will take 1 and I will add 12%. So it will become 1.2. So this is going to be the multiple factor here. This is going to be the multiple factor. So here in this case, in headcount cost, headcount overview, here we have calculated the salary, right? So here, what I will do, I will provide the effect of appraisal, right? Effect of appraisal, right? So how much appraisal company will give? Company will give 12% appraisal. So here I will copy the multiple factor. This is 1.12. So this is going to be same for all the years, right? This is going to be same for all the years, right? So in first year, this is the salary. So obviously in first year, company won't provide any appraisal, right? In first year, company won't provide any appraisal. So appraisal will be provided from the second year itself, right? So appraisal will be provided from second year itself. So I will take here 1.12 and I will copy this data. So every year the salary will increase by 12%. So now if I want to calculate the headcount cost, what is going to be the overall headcount cost here with benefit, right? So this calculation I have already done here, right? This calculation I have already done here. So we will ignore this sheet and I will only copy this data and I will paste it here, right? So total headcount cost with benefit is going to be how much? So here, no appraisal will be given, right? So it is going to be one only. So here we will take 16 like 80,000 and we will multiply this with one. And here you can see this time we have multiplied 16 like 80,000 with 1.12. So next year's salary is going to be 18 lakh 81,600. Then here, what is going to be the salary? Normal salary was 23 lakh 70,000. Now here the salary is going to be 26 lakh 54,400 for next year. So this is how what we have to do. We have to compute the value of salary, right? So this is going to be the total salary along with benefit. I think you understood. You can ignore this sheet, right? There is no relevance of this sheet here right now. So here, what we have done, we have calculated this value. Now, if you see here, we have to calculate the operating expense, right? What we have to do here in this case, we have to bring the values related to the operating expense. Now, what we have done already, we have computed the value of salary, right? So from where I will bring the value of salary. Here, if you see, this is the value of salary, which I will bring here. So now we are preparing new sheet that is headcount, total operating expense, right? We are preparing new sheet where we will record total operating expense. So here you can see this is the salary cost, right? This is the salary cost. Then we have to find out the value of miscellaneous expense. Now, where the information related to miscellaneous expense is given here. So here we can see the assumption sheet, and in assumption sheet, you will find the information related to the miscellaneous expense. Now here, if you see, the miscellaneous expense is 3% of sales, right? Miscellaneous expense is 3% of sales. So what I will do, I will take 3% of sales, which is going to be the miscellaneous expense. Now, from where we will get the information related to sales? Sales we have calculated here, right? Sales we have calculated here. So this is the total sales. So I will select total sales, then I will multiply this with 3%, right? In assumption sheet, the miscellaneous expense percentage is given, that is 3%. So let's calculate this value, and here you will find out the miscellaneous expense, that is 300,000, then 345,600, then 414,000. And this is how, we have to calculate the miscellaneous expense. Right. Now, what is the cost of research and development? So in assumption sheet, if you see research and development cost is given, that is 7% of sales. Now we already know the sales value, which is $10 million or 1 crore in first year. Then we can multiply this with here 7%, right? And then you have to press your control enter. So here you will get the research and development cost, right? So we have calculated the amount of research and development cost. Now in assumption sheet, if you will see the information related to rent, so it was given that $25 is the cost per square feet, right? $25 is the cost per square feet. And here you can see the total square feet which has been used by company, right, to manufacture a premise is 4,000 square feet. So here you can see total rent expenses $100,000, and this is going to be same for all the years. So we will take your rent cost, right? Now you have to understand that if you want to calculate the depreciation amount, for this, what we have to do, we have to prepare the capex budget. Right? We have to prepare the capex budget. So we will discuss about the depreciation in coming time. Right now, I will ignore the depreciation part. Right now, what I will do, I will ignore the depreciation part. Now, if I want to calculate the total operating expense, so here what I will do, I will take the sum. Right, I will take the sum here, and I will take the total of all the operating expenses. We have to include the depreciation also, because later on what we will do, we will calculate the depreciation. So here you have to apply the sum formula and then press Control Enter, and here you will find the total operating expense. Right here you will get the total of operating expense. Now here, if you see the next line item which is given here is disbursement of operating expense. Now, what is the meaning of disbursement of operating expenses? Here we have seen that company has to pay salary, miscellaneous expense, research development expense, rent expense, right? So these are the expenses which company has to bear, right? And these are the cash expenses. Depreciation is a non-cash transaction, but apart from depreciation, if you see the other transaction, those transactions are cash transactions. So obviously, what company will do, company will pay cash for these operating expenses. Now, question arises that when company will pay the cash. So obviously, if nothing is given, so we will assume that company will pay the cash in same year. And if I talk about salary, miscellaneous expenses, rent, so it is paid every month, right? Rent is paid every month, salary is paid every month. So these are recurring expenses. So in the year itself, what company will do, company will pay off these expenses, right? So here, what we have to do now, we have to find out that how much cash company will pay for these expenses, right? So here you can see salary is given, miscellaneous expenses given, then research and development, rent amount, these all expenses are given. So we will copy these values here, right? So same amount we have copied here. Do you think that in case of depreciation, we need to pay any amount? Obviously not. Obviously not, because depreciation is a non-cash expenditure. So here I will highlight this and I will write down here that depreciation is a non-cash expenditure. So there will be no cash outflow. There will be no cash outflow for this expense, right? So if I do the total here, so total disbursement for operating expense, if I calculate, so I will first take the sum of these line items, and here you can see this much amount we will pay for the operating expenses. Now, if you have noticed, so every time what we have done, we have calculated the disbursement, right? We have calculated the disbursement amount. Now, what is the reason why I have calculated the disbursement amount, or why you will calculate the disbursement amount? Here, this disbursement amount will be used, when you will prepare the cash budget or cash flow statement. So you have to understand that this is an important calculation, right? This is an important calculation. So here, what I will do, I will highlight this with different color, right? I will highlight this with different color. So here, when you will prepare the cash budget, so automatically you will be able to understand, right, that what is the use of disbursement. So here we can see that in case of inventory purchase, there will be disbursement, and in case of sales, there will be cash collection, right? So I've highlighted the cash transactions with a different color. So when you will prepare the budget, so you will be easily able to fetch this data, right? Then here we will jump to the next part, that is capital, right? Here what we have to do now, we have to prepare the capital budget. Now, if you see capital expenditure information we have to bring here. Now, if you will see the assumption sheet, in assumption sheet, information related to capital expenditure is given. Now, company is a growing company, right? They have started the business and they believe that their business will grow. That's the reason what they are doing. They are buying assets of $450,000 each year. So it is not possible for any company to buy assets in one go, right? So what company do? When their business grows, what company do? Accordingly, company buys the asset. If the sales of business will grow, automatically company will require more and more assets to manufacture their product, right, or to provide services to their customers. And that's the reason company buys more and more assets. So here we have taken constant number, but when you will do the more practice, right, when we will take more practical cases, there you will get more idea that how you can calculate the requirement of assets. So we will solve ACC financial model, right? We will prepare SEC financial model in coming lectures where you will understand that how practically you can find out that what amount of capital assets will be required. So there we will read a lot of reports, right? So right now in this case, assumption is given that company will buy assets of $450,000 each year. So it is easy to find out that what capital expenditure company will incur. Now, if you know that what amount of capital expenditure company will incur, so it will be very easy for you to find out the depreciation amount also, right? So here in first year, company has acquired assets of $450,000. So what I will do here, I will put this value in capital sheet. We are having capital sheet with us. So kindly bring this value here, right? So here, what I will do from assumption sheet, I will bring this value, that is equipment purchase value, and each year company will buy assets of how much? Each year company will buy assets of $300,000, that is equipment, 100,000, that is furniture, and pictures of 50,000. So here we can do the total, right? So here, if I say that what amount of assets company will buy each year, so it is $450,000, right? Disbursement for capital expenditure. Now, if you see the assumption sheet, nothing is given, right? Nothing is given. So we are assuming that company buys capital asset in cash, right? Company makes the immediate payment. If you want to take different assumption, you can take different assumption, but right now, as per this model, we are assuming that disbursement will be made in same time. So when company buys assets, immediately company makes the payment. So here, what we will do, we will take the same amount from here, right? Because here what company will do, company will make the payment immediately. So how much company will pay in first year? In first year, company will pay $450,000. And similarly, company will make the payment immediately when company will buy the asset here, right? So here, if I highlight the disbursement sheet, so you will find that company will make the payment immediately. So here I have highlighted the disbursement part with different color. Now here, what we have to do, we have to calculate the amount of depreciation, that what amount of depreciation will be charged, right? So if you see the assumption sheet, so some information related to depreciation is given here, right? What is the information given here? Here, equipment depreciable life is given, right? Equipment depreciable life is given, that is 5 years, right? Then furniture depreciable life is given, that is 5 years, and fixture depreciable life is given, that is 4 years, right? Now here, what we have to do, we have to find out the depreciation. Now, if depreciation life is given 5 years, and we are assuming that company follows the SLM method, mostly, when we prepare model, right? Any financial model, there we assume that company follows SLM method of depreciation. Now, what is the formula for calculation of depreciation in case of SLM method? If you want to calculate the depreciation by considering SLM method, so there you will take the cost of assets, right? There you will take the cost of assets and you will divide the cost of assets with the life of asset, right? You will divide the cost of asset with the life of asset. So here you can see life of asset is also given, right? Life of asset is also given here. So now if I say that the equipment value is 300,000, right? If I say that the equipment value is 300,000 and if I divide this with 5, so what is going to be the first year depreciation? Here the first year depreciation is going to be 60,000. So can we say that in first year you will write off 60,000? What is the asset value? Asset value is 300,000. and depreciation amount is 60,000. So if I want to calculate the depreciation in terms of percentage, so here I can use the formula that is depreciation, right, divided by the asset value divided by the asset value here, right, divided by the asset value here. So here you can see depreciation amount is 60,000 and we will divide this with 300,000. So depreciation percentage is going to be how much here in this case? Depreciation percentage is going to be 20%. So each year we will charge depreciation that is going to be 20%. Or the simple method to find out, the depreciation amount is going to be here. If you want to calculate the percentage, so you will take your 1 and you will divide this with 5, right? You will divide this with 5. So here you will get the 20%, right? If you will take your 1 and if you will divide this with 5, so again you will get 20% because each year you will charge 20% depreciation. If you will divide 1 with 4 here, so you will get the depreciation percentage that is going to be 25%. So this is how we can calculate the depreciation, right? So here, if I want to calculate the depreciation for each year, so here I will take 1 and I will divide this 1 with 5. And we have to freeze 5 because this is going to be common value for all the years, right? But here I will unfreeze F here, right? I will unfreeze F here. Why I will freeze unfreeze F here? Because for calculation of furniture depreciation, I will be requiring here. No, I should freeze F here, right? F we have to freeze, and this column we have to unfreeze. This column we have to unfreeze because here this F column, sorry, row we have to unfreeze and column will remain same. So here you can see F column will remain same, but row should change here. So if I talk about furniture depreciation, so to calculate furniture depreciation, I will be requiring the data from row 83, right? From row 83. If I want to calculate the depreciation for fixtures, so I will be requiring the data from row 84, right? So here I can press Control Enter, and here you can see this is the depreciation rate. So for furniture and equipment, we will charge 20% depreciation each year. For fixtures, we will charge 25% depreciation each year. I think you understood this. So here now, if I jump to the capital, so we can calculate the depreciation here, right? So how much depreciation we will charge? 20%, 20%, and 25%. So here we know the asset value, right? This is the asset value. And we will multiply, right, this with the depreciation percentage. This is given in assumption sheet, that is 20%. And I will press here Control Enter. Right. What I've done, I have taken equipment value and I have multiplied that with 20%. Here also, again, I have taken the equipment value. And luckily, in this case, all the assets value and depreciation rates are same. So in each year, you will find the same amount of depreciation. If you see furniture value is given here, so in each year, you will find the same amount of depreciation here. So what we will do, we will take the total here. Let's take the total. So this much depreciation you will charge each year, right? This amount of depreciation you will charge each year. That is 92,500, 92,500, 92,500, and 92,500. This amount of depreciation you will charge each year. But what we need to do here, we need to calculate the accumulated depreciation also. If you see, this is going to be the first year depreciation, right? This is going to be the first year depreciation. But second year depreciation is going to be more, like second year depreciation would be more. Why? Because you have added more assets, right? You have added more assets into the business. So here in this case, what we will do, we will calculate the cumulative capital expenditure first, right? So in first year, what you have done, you have acquired assets of 450,000. Then in second year, you have acquired assets of again 450,000. So first year asset value is going to be 450,000. What is going to be the second year asset value? It is going to be the previous year value plus second year value. Right? It is going to be previous year value plus second year value. So the total value of asset is going to be here $900,000. Further, if you will drag this value, so you will be able to find out the asset value for all the years, right? Cumulative asset value. So in first year, the asset value is $450,000. In second year, the asset value is $900,000. In third year, asset value is 13,50,000. In fourth year, the asset value is 18 lakh. Now from this, what we have to do, we have to subtract the accumulated depreciation. So first year depreciation is 92,500, right? What is going to be the depreciation for second year? So what is going to be the accumulated depreciation? So here, if I want to find out the accumulated depreciation, the value of depreciation is going to be the previous year depreciation plus current year depreciation, right? The previous year depreciation plus current year depreciation. So here we will be able to get the accumulated depreciation, right? We will be able to get the accumulated depreciation. So what is going to be the value of fixed assets after depreciation? For this, we have to take the total value. We have to subtract the accumulated depreciation here. So you can see here, this is going to be the value of asset. I think you're able to understand, right? This is going to be the value of asset here. Now here, what we have to do, we have to find out the payable adjustment for capex disbursement. So, we have already calculated this amount here, right? So cumulative disbursement for capex. So how much in total you will pay for the capex if I calculate the cumulative disbursement? Like what is going to be the cumulative disbursement? That in first year, if you have paid 450,000, in second year, again you have paid 450,000. So till second year, how much you have paid? Right? That is going to be the cumulative disbursement. So in first year, what you have done, you have paid 450,000. Right? Now in second year, again you have paid 450,000. And in first year, you have already paid 450,000. So in total, in second year, how much you have paid? Till second year, how much you have paid? I should say till second year, how much you have paid. So till second year, you have paid $900,000. Right? So if I talk about that, till third year, how much you have paid? So it is going to be the total of third year payment plus till second year, whatever amount you have paid. So if I drag this here to till second year, you have paid here 13,50,000. Right. Then if I further drag this value, so you will get the amount that till fourth year, how much you have paid? You have paid 18 lakh. Right. This is how we have calculated these values. Then payable adjustment for capex disbursement. So we are already paying, 4,50,000 each year. So we can ignore this line item. This is not required, right? Unnecessarily, we should not complicate this concept. So here, what we have done, we have calculated the capital budget also. So I think you understood how we have calculated these values. Now here, what we have to do, we have to write down the depreciation amount, right? So we have already calculated the depreciation amount. So from where you will bring the depreciation amount from capital sheet, what you can do, you can fetch the information related to the depreciation. So you can see here, this is the each year depreciation, right? So 92,500. Then again, you have acquired new assets. So here you will charge depreciation that is going to be 92,500, right? Again, you have acquired new asset. So you will charge new depreciation amount that is going to be 92,500. But what is going to be the total depreciation which you will charge? So your total depreciation which you will charge is going to be 92,500, 185,000, 277,500. This is how the depreciation amount will increase each year. So I think you understood, Hannah, what we have done till now. So remaining part, what we will do, we will discuss in next session. So my suggestion is go and revise everything and we will connect in next lecture and we will discuss more. Thank you.